Ladies and gentlemen, listen to this. While you were sleeping, silver just pulled off one of the most explosive moves in modern commodity history. We're not talking about a nice little rally or some gradual climb. We're talking about a 65% surge in a single month. January 2025. Silver rocketed from under $29 an ounce to over $48. That's the kind of move that creates millionaires overnight and leaves everyone else asking what the hell just happened. Gold, meanwhile, the so-called king of metals, the safe haven everyone tells you to buy, barely moved. It's up less than 8% over the same period. Let me put this in perspective for you. Silver is outperforming gold by a margin we haven't seen since the 1980s. The gold to silver ratio, which sat at 94 ounces of silver to 1 ounce of gold just weeks ago, has now collapsed to under 55. That's a 40% compression in 30 days. Professional traders know what this means. Central banks know what this means. The smart money has already positioned themselves. And if you're just hearing about this now, you need to understand something critical. You're not early, but you're not too late either. What's happening right now is the beginning of something much bigger. And by the end of this video, you're going to understand exactly why silver isn't just outperforming gold, it's potentially setting up for the trade of the decade. Before we go any further, if you want to stay ahead of moves like this, if you want to understand where the smart money is flowing before it becomes mainstream news, do yourself a favor and subscribe to this channel right now. Hit that notification bell because we break down the market forces, the data, and the trends that Wall Street doesn't want retail investors to understand until it's too late. We called the setup in precious metals months ago, and the people who listened are already seeing the results. Don't be the person who wishes they had paid attention. Subscribe now, and let's continue. So what's actually driving this insane move in silver? The first thing you need to understand is that silver is not just a precious metal anymore. It's become a critical industrial commodity at the exact moment when global industrial demand is exploding. Gold sits in vaults. It's beautiful, it's prestigious, it's a hedge, but it doesn't do anything. Silver, on the other hand, is in your phone, your car, your solar panels, your computer, and increasingly, it's becoming the backbone of the green energy transition and the artificial intelligence boom. Every single electric vehicle requires between 25 to 50 grams of silver. That doesn't sound like much until you realize global EV sales are projected to hit 20 million units this year. Do the math. That's 500 to 1,000 metric tons of silver just for EVs, and that number is doubling every 2 years. Solar panels are even more silver intensive. The average solar panel uses about 20 grams of silver, and global solar installations are expected to reach 400 gigawatts this year. We're talking about thousands of metric tons being pulled out of available supply and locked into infrastructure that won't be recycled for decades. Then there's the AI revolution. Data centers, semiconductors, 5G infrastructure, all of these technologies rely heavily on silver because of its unmatched electrical and thermal conductivity. NVIDIA's chips, the GPUs powering the AI boom, they all contain silver. Microsoft's data centers, Amazon's cloud infrastructure, every major tech company scaling AI is indirectly consuming massive amounts of silver. And here's the kicker. Unlike gold, most of the silver used in industrial applications is not recoverable. It's used in such small quantities per device that recycling is not economically viable, that silver is gone forever, removed from supply. Meanwhile, annual silver mine production is barely increasing. We're producing around 830 million ounces per year globally, and that number has been relatively flat for the past 5 years. Production costs are rising, ore grades are declining, new discoveries are rare, and yet demand is accelerating faster than at any point in modern history. Now let's talk about the gold to silver ratio, because this is where things get really interesting. For most of human history, the ratio of gold to silver hovered somewhere between 15 to 1 and 30 to 1. That meant if gold was $1,000, silver would be worth somewhere between $33 and $66. But over the past few decades, that ratio got wildly distorted. In March 2020, at the peak of the pandemic panic, the ratio hit 124 to 1. Gold was nearly $1,700, and silver had crashed to under $12. That was the most extreme dislocation in over a century. Smart money recognized this immediately. They started accumulating silver aggressively, not retail investors, not the people watching cable news. Institutional players, hedge funds, sovereign wealth funds, they knew this ratio would revert to the mean, and revert it has. The current ratio of 55 to 1 is still historically high, meaning silver still has room to run even if gold does nothing. But here's what most people miss. If this ratio compresses back to the historical average of 30 to 1, and gold stays where it is around $2,800, silver would need to be at $93 an ounce. If gold rallies to $3,000, which many analysts expect given central bank buying and geopolitical instability, silver at a 30 to 1 ratio would be $100. That's more than double from current levels. And we're already seeing the early signs of institutional repositioning. The SLV ETF, the largest silver exchange-traded fund, has seen inflows that haven't been matched since the 2011 silver surge, when silver briefly touched $50. Futures positioning on the COMEX shows a dramatic shift. Managed money, the big hedge funds and trading firms, have flipped from net short to heavily net long. They're not just buying, they're leveraging up. Open interest in silver futures has exploded while registered inventory, the actual physical silver available for delivery, has been steadily declining. We're now at levels not seen since before the last major silver squeeze. The physical market is even tighter. Premiums on physical silver coins and bars have spiked to $4 to $6 over spot in many markets. Delivery delays are stretching from days to weeks. Dealers are reporting allocation limits from refiners. This is not normal. This is what happens when paper markets and physical markets start to diverge. And historically, when that divergence happens, prices don't drift higher. They explode higher. Let's talk about something most mainstream financial media won't touch: the manipulation narrative. Now, whether you believe silver has been manipulated or not, the facts are undeniable. Multiple major banks have been fined hundreds of millions of dollars for spoofing and manipulating precious metals markets. JP Morgan paid nearly $1 billion in fines for precious metals manipulation. Deutsche Bank, HSBC, others have all settled similar charges. The playbook was simple: use massive paper short positions on the COMEX to cap prices while accumulating physical metal. For years, every time silver tried to rally, mysterious large sell orders would appear in the futures market, knocking prices back down. But something has changed. The short positions that used to dominate the COMEX have been dramatically reduced. The big banks that were net short are now either flat or net long. The regulatory environment has tightened. The ability to manipulate through spoofing is harder. And most importantly, physical demand has become so overwhelming that paper games can't contain it anymore. This is why we're seeing the kind of price action we're seeing right now. The suppression mechanism is breaking. Here's another angle most people aren't considering: central banks. Everyone knows central banks have been buying gold at record levels, over 1,000 tons per year for the last 2 years. China, Russia, India, Turkey, they're all stockpiling gold as a hedge against the dollar and geopolitical instability. But what most people don't realize is that some central banks and sovereign wealth funds are starting to look at silver differently. Kazakhstan recently announced they're considering adding silver to reserves. Mexico, one of the world's largest silver producers, has historically held silver reserves, and there's talk of increasing those holdings. Why? Because at these prices, with this industrial demand profile, silver represents better value and better upside than gold. If even a small fraction of the capital that's been flowing into gold starts flowing into silver, and we're talking about a market that's 40 times smaller than gold, the impact on price would be seismic. Now let's address inflation and interest rates, because this is the macro backdrop that makes all of this even more compelling. The Federal Reserve has signaled they're done hiking rates. Inflation has come down from its peaks, but it's proven sticky. Core inflation is still above target. The Fed is trapped. If they hike further, they risk breaking something in the economy or the financial system. If they cut or hold, inflation could reignite. In this environment, real assets, commodities, precious metals tend to perform extremely well. Gold has already priced in some of this, which is why it's been hovering around all-time highs. But silver, because it got beaten down so badly over the past few years and because it's been overlooked in favor of gold, is just starting to catch up. And when silver catches up, it doesn't do it slowly. It gaps. It rips. The 2011 move saw silver go from $18 to $49 in 6 months. The 1980 move saw it go from $6 to $50 in a matter of weeks. We're not saying that's exactly what's about to happen, but the pattern is eerily similar. Compressed ratio, industrial demand surge, monetary instability, and a shift in positioning from short to long. There's also a supply story here that almost no one is talking about. Silver is primarily a byproduct of other mining operations. About 70% of silver comes from lead, zinc, copper, and gold mines. It's not the primary target. And as base metal prices have been under pressure and mining companies have cut capex, future silver supply is even more constrained. There are very few primary silver mines being developed. The ones that do exist face permitting challenges, environmental opposition, rising labor and energy costs. Meanwhile, existing mines are depleting. Ore grades are falling. What used to yield 10 ounces per ton now yields 6. The easy silver has been mined. Getting new supply online takes years, often a decade from discovery to production. Demand, however, is increasing right now. This quarter, this year, that imbalance doesn't resolve itself with higher prices tomorrow. It takes years to respond. And in the meantime, prices have to go high enough to either destroy demand or incentivize a massive increase in exploration and development. We're nowhere near those prices yet. Another critical factor: retail investor behavior. And this is where it gets really interesting. Retail investors, the everyday people who buy silver coins, bars, ETFs, are historically late to these moves. They show up after the price has already doubled or tripled. They read about it in the news. They see it trending on social media. They FOMO in at the top. But right now, even with this 65% move in January, retail hasn't fully shown up yet. Google search trends for silver are up, but they're nowhere near the levels we saw in 2020 or 2011. Reddit communities like Wall Street Bets and Silver Squeeze, which briefly pushed silver in 2021, have been quiet. Coin dealer websites report strong sales, but not the panic buying we saw during previous spikes. This tells us something important. The move we've seen so far is institutional. It's smart money. It's informed capital. When retail finally wakes up, when your uncle starts asking you about buying silver, when CNBC runs segments on the silver boom, that's when the real moonshot begins. And we're not there yet. Let's also consider the geopolitical dimension. We're living through a period of unprecedented global instability. Wars in Europe and the Middle East, tensions between the US and China, BRICS nations exploring alternatives to the dollar, sanctions fragmenting global trade, debt levels at historic highs across developed economies. In this environment, hard assets become incredibly valuable. Gold gets the headlines, but silver has always been the people's metal. It's more accessible, it's more volatile, which means more opportunity, and it has that industrial use case that makes it indispensable regardless of what happens in financial markets. If we slide into recession, silver gets a bid as a monetary metal and as central banks ease. If we get reinflation, silver benefits from both monetary debasement and industrial demand. If we get a crisis, silver often outperforms gold on a percentage basis because it's more leveraged to fear and to recovery. It's a win across multiple scenarios. Now, we need to talk about what happens next, because understanding the setup is one thing, but knowing how to think about the trade is another. Silver is not a buy and forget investment like an index fund. It's volatile. It can drop 20% in a week and then rally 40% the next month. The people who make money in silver are the ones who understand the cycles, who have conviction in the thesis, and who don't get shaken out by short-term noise. The current move is likely just the beginning of a longer cycle. If history is any guide, silver bull markets last 18 to 36 months and see gains of 300 to 800% from the lows. We started this move from under $23 in late 2024. If we're in a true bull cycle, $50 is just a milestone, not the destination. $70, $80, even $100 are all within the realm of possibility over the next 12 to 24 months if the factors we've discussed continue to play out. But here's what you need to understand. The market doesn't move in a straight line. There will be pullbacks. There will be manipulated smackdowns. There will be periods where gold outperforms and silver looks dead. That's when weak hands sell and strong hands accumulate. The key is to understand the fundamentals. Supply is constrained, demand is accelerating, monetary conditions favor hard assets. The ratio is still historically elevated. Institutional positioning is shifting. Retail hasn't arrived. Every one of these factors supports higher prices over time. The volatility is just the cost of admission for the potential returns. One more thing that's critical to understand, the narrative is changing. For years, silver was seen as a relic, a boomer investment, something your grandfather bought and stuck in a safe. But now, with the green energy transition, with AI, with the dollar's dominating position being questioned, silver is being reframed as a critical strategic resource. Countries are starting to think about silver the way they think about lithium or rare earths. Essential, limited, geostrategically important. This narrative shift brings in new types of buyers. Sovereign wealth funds, ESG-focused funds, technology funds that need exposure to the supply chains they depend on. This isn't just gold bugs and preppers anymore, it's a much broader and deeper pool of capital. And let's address the elephant in the room. Could this be a bubble? Could silver be overbought? Sure, anything that goes up 65% in a month is going to have skeptics calling it a bubble. But bubbles are characterized by mass participation, euphoria, detachment from fundamentals, and extreme valuations. We have none of that yet. Silver is still below its inflation-adjusted all-time high from 1980, which would be over $150 in today's money. Participation is still largely institutional and informed. The fundamentals, supply-demand, industrial usage, monetary backdrop are stronger than they've been in decades. And sentiment, while improving, is far from euphoric. We're in the early innings of what could be a historic move, not the ninth inning of a speculative mania. So what does all this mean for you? It means you're witnessing a rare alignment of factors that doesn't come around often. It means the gap between where silver is and where it's likely headed based on fundamentals and historical patterns is significant. It means the risk-reward, especially for those who understand the volatility and can handle the swings, is heavily skewed to the upside. And it means that whether you're already positioned or you're just now paying attention, understanding what's happening in the silver market is essential, because this isn't just about one metal. It's a signal of broader shifts in global markets and monetary systems and how capital is being reallocated in a world that's fundamentally changing. The smart money has already moved. The institutions have repositioned. The supply-demand fundamentals have flipped. The ratio is compressing. The narrative is shifting. And the retail wave hasn't even begun. What we're seeing right now in silver is not just a rally. It's the early stage of a repricing. A recognition that this metal, which has been undervalued, overlooked, and manipulated for years, is actually one of the most critical resources in the modern economy. And when the market reprices an asset like that, it doesn't happen quietly. It happens explosively. It happens in a way that creates wealth for those who see it coming and regret for those who don't. This is your once-in-a-generation setup, the kind of opportunity that people talk about for decades, the kind that when you look back, you either positioned for or you watched from the sidelines wishing you had. Silver is destroying gold right now, not because gold is weak, but because silver's time has come. The fundamentals, the technicals, the macro environment, the structural changes in supply and demand, everything is aligned. And if you understand what you've just learned in this video, you're now ahead of 99% of people who still think silver is just a shiny metal that goes up and down randomly. The question now isn't whether silver is going higher. The question is whether you're going to be part of the move or part of the crowd that wishes they had paid attention. Stay informed. Stay ahead. And remember, the biggest gains come to those who see the shift before it becomes obvious. If this video gave you clarity, if it connected the dots in a way that makes sense, share it with someone who needs to see it. Drop a comment with your thoughts. And make sure you're subscribed, because what's happening in silver is just one piece of a much larger puzzle we're going to continue breaking down. The market is changing, the rules are being rewritten, and the people who understand that are going to be the ones who profit. See you in the next one.